Welcome to this video for Ithought Connect, where we are going to talk about when to sell a stock. Now, a lot of attention goes into what to buy, when to buy, but people hardly talk about exiting or actually creating wealth, which seems ironic, right? Because when you buy, you really have no visibility into what's happening. But when you sell, it's a much more deterministic decision. You know how much profit or loss you have and why you're exiting. In this video, we're going to talk about three types of stocks you should be selling: the losers, the performers, and the misfits. So let's begin with losers. Losers are companies that are not doing much for your portfolio. You're either making losses and the company itself is going through fundamental shifts, which would sort of entail a difficult few quarters or few years ahead of you. So when you have that kind of visibility, if an industry is going through a big shift, you might want to step back and see whether you want to own this business at all. Now, how do you segment or separate a loser from a fighter? A fighter could be a stock or a business that's in a difficult situation, but the key difference between a fighter and a loser are two things, right? You want to look at balance sheet quality, because a strong balance sheet can help a business weather even the worst of times. The second thing you want to look at is the management. So you're looking at corporate governance standards, their execution track record, and the game plan they have for this challenging time. So when you're evaluating a fighter against a loser, you're really looking at these things to differentiate the two, and you need to be sure as to which one falls into which bucket. So that can be a little tricky, but with the next set, it's a little bit easier to identify when you have to sell. The next set is, of course, performers. So these are businesses that you manage to buy at the right time in a cycle, who have delivered excellent returns, and it's time to book profits and not get too attached to how these businesses have done. We can't expect the good times to last in any industry or any company forever. So when we know this, cyclically entering and exiting based on valuations can be a great guidance in terms of deciding when to sell. Even the best of companies, it might make sense to get out and get back in when the cycle becomes more favorable for a long-term investor. This brings us to the last kind of stock you need to be selling in your portfolio, which is the misfit. Now, a misfit can be an idea that you bought but didn't position size correctly. It could be an idea that just doesn't fit into your risk or return expectations. So if you're a conservative investor and you've brought a very aggressive microcap investment, maybe it just doesn't belong in your portfolio and it's worth getting rid of it. Similarly, if you have business that isn't position sized well enough in your portfolio, it's worth trimming it and getting out, creating liquidity that can move into bigger ideas that you can build and compound wealth in. There's no point in having a long tail that really doesn't create too much wealth, because the more focused your portfolio is, the better the results can be. So we hope this has been a good guideline for you to decide when to sell and what to sell. If you need more assistance in understanding your portfolio or working with your investments, you can always reach out to us and we'd love to help you figure out what you should do in your wealth creation journey.